Before I even tell you what double entry means, what double quote means too, I would want in this case here to remind you how our old financial statements used to look like. If you remember our oldest financial statement here that we used to call balance sheet, if you can remember, balance sheet, right? It always used to follow what we used to call, right, the accounting equation. The accounting equation. Under the accounting equation, we use, even right now, we talk of this every time, that assets must always be equal to capital plus what here? Plus liabilities, yes. Capital plus liabilities. And if you remember, the balance sheet, ladies and gentlemen, the old balance sheet used to be in T form, in T format like this. We used to have asset here, and then on the other side here to balance our equation, we used to have what we call capital plus what here, capital and liabilities here. Capital and liabilities like that. So anytime we procured an asset, right? We procured an asset. If you can remember, if for example, we have a motor vehicle, motor vehicle is our asset. So what do? If it's our asset, we shall come and do what here? Put it here. And then we'll ask ourselves, how was this asset financed? Right? How was the asset in this case here financed? Very important, perhaps in this case here, the owner brought in money, right? Through what we call owner there, owner's contributions. Owner's contribution, that is what here, capital. Perhaps in this case, ladies and gentlemen, this particular vehicle was bought by ourselves on credit. So we incurred a liability. So it will be very important for you to appreciate this, ladies and gentlemen, that whenever look at these assets, where are they? They are on this side. This side of the T account, you normally call this side what here? Debit side. This side normally call it debit side. And the other side here we call it what here? Credit side, the T account. Listen, ladies and gentlemen, whenever assets increase, we shall always be debiting assets. So what are we saying here? Whenever this side increases, always debit the particular asset account. The same case with these capital liabilities. Whenever we have an increase on this side, we shall be doing what we call credit. Now listen, if for example today I was to start a business, and inject into this business how much? 1 million Kenya shillings. 1 million Kenya shillings. I've started the business, I'm the owner. This 1 million Kenya shillings that I've injected into my business, of course, ladies and gentlemen, is a very important business transaction that will need what here is going to be captured. And for you to capture this, it will be very important for you to know that every business transaction in terms of accounting must always have what we call double entries. Every business transaction must have what we call double entries. Double entries means what here? We must always be having two accounts being affected by every business transaction. Every business transaction, you must be having how many accounts being affected? Two of them. And they're going to see, because of this concept of two, now we talk about what here? We talk about double entry. This will come in handy. And of course, ladies and gentlemen, we have generally our income statement. If I'm to present this income statement in form of a T account, which nowadays we don't do, in the form of a T account, remember the incomes were always being credited, the incomes. So here we are going to be having the sale, but there's what your costs of what you expect, expenses on the debit side. So ladies and gentlemen, there is something that I want you to know here. That whenever we incur expenses, whenever expenses increase, we shall be debiting. So expenses, whenever expenses increase or whenever we incur them, we debit them, right? How about sales? You can see it on the credit side of the income statement. sales, and the other incomes. Whenever they come to the company, like this sales money, we shall be crediting their accounts. We shall be crediting their accounts. It may not make sense right now as we speak, but as we progress, you guys will be able to really appreciate what I'm talking about here. Now, ladies and gentlemen, there is this shortcut that I want you always to remember whenever we talk of double entry. This shortcut goes like this. Whenever we talk of double entry, a good student will be forced to remember whenever you are given by the examiner anything to do with double entry, anything to do with you're given business transactions, and then you are asked here to either prepare journals or ledger accounts. You must always remember what we call the pairs. So pairs, this P stands for what here? This pairs. The pairs. We have this P stands for purchases. This P stands for purchases. This E stands for expenses. This A stands for assets. And then of course we have these are standing for revenue. Revenue is sales revenue. Then we have all liabilities, and then we have what we call share capital. Then we have what we call the share capital. Now listen as you write, because I would want you to write this down. This is very important. I want you to write this down. That whenever these three increase, whenever they increase, you would always be debiting. Debit increases to these accounts. And then these three, whenever they increase, you shall always be crediting. Credit increases to these accounts, those three accounts. And I would want to know, ladies and gentlemen, at this juncture, whether you've been able to take these notes. Have you been able to take these notes at this juncture? I would really be interested in knowing whether you've been able to take those notes down. I would want to know whether you've been able to take notes. Before I continue, I would want to know whether you have been able to take notes. Please go to the sections there, and do what here, somebody. Chat section there, and then you say yes or no. Very important, because these are those things that you can rarely hear from many teachers. Not many teachers will be able to teach you this thing. Right. Yes. So what have we said for these three accounts? Whenever you have purchases, you have expenses, you have assets, any of this account here going up, we shall always be doing what here? We shall always be debiting. These three accounts here shall always be doing what here? Somebody crediting. Very important. Now, what have we said about double entry? Double means two. That every business transaction shall always be entered into two corresponding accounts. Every business transaction involving money must always be entered into two corresponding accounts. And I would want to start, ladies and gentlemen, straight away here by just writing a few statements here. So we have here, 𝐿 starts a business. And in this business, he is able to put 500,000 Kenya shillings to his business. Now, ladies and gentlemen, Joshua Aura is the owner of the business. Whatever contribution he does to his business is called capital. This is the first business transaction I would want us to attack and account for it nicely using double entry. Now, the first thing you need to do is to appreciate which two accounts have been affected by this business transaction. I can see Joshua Aura here has introduced this 500,000 has not been taken to the bank, right? I could have, in this case, taken it straight away to my cash in the office. So it is still cash. So I can see, ladies and gentlemen, two accounts here. I can see two accounts being affected. I can see cash here will be affected. And then, of course, we have the concept of what here? Capital. The concept of capital. Now, ladies and gentlemen, from there now I need to know, like now cash. You see, cash is a company's what? Yeah, asset. Cash is an asset. Cash is an asset. A current asset for that matter. It's an asset. It's an asset, very important. Now, if you tell me to come and generalize this, if you come and tell me to capture this now in form of double entry, first of all, I've gotten to know which two accounts are being affected. Cash has been taken to, right, the business. Cash is going to be affected. Cash is increasing. What is happening here? Joshua Aura has been able to increase his capital, his contribution to the business. So two of them. Then I'll come and remember very fast my concept I've just taught you of pairs. My concept of pairs. So these pairs I can see cash is an asset. So that in my journal, what I'll do before I show you how to do the ledgers, I'll come here and debit the cash like that. And then I can see here share capital. Share capital. Remember this side here we are debiting. This other side here we are crediting like that. So we are debiting the cash because it's an asset, and then we shall come and credit what we call the share capital account. What we call the share capital account. So this is the cash account you are debiting. How much are we debiting this with? The entire amount, 500,000, 500,000 like that. 500,000, 500,000. Of course, for every journal, you must always have a narration down here. But today we are not looking at narration. Today, I would only want you to check out on what year, how I'm coming with this twin account, double means two, twin. Every business transaction must be passed through two entries, must be passed through two accounts. Now, ladies and gentlemen, now we have here, this is transaction number one. Transaction number two for the business, we are told here for the business, Joshua Aura buys a jalopy, an old rickety pickup for the business, So in this case, Joshua Aura buys a pickup for the business, a pickup for the business. So this pickup is worth 300,000. There is money being involved, so it's a business, it's a business transaction. So Joshua Aura buys a pickup worth Kenya shillings 300,000, and then he's giving what here? He's giving cash for cash. So for cash, ladies and gentlemen, please listen here. Listen here, and I would want you to listen to me very carefully. A good accountant must appreciate every business transaction must have how many accounts? Two accounts. Which two accounts here are being affected? Which two accounts are being affected? Can somebody in this case here try telling me there in the charts? Which two accounts are being affected? Which two accounts are being affected? Which two accounts are being affected? Please go to the chart and tell me with this business transaction, which two accounts are being affected? Because every business transaction must be having how many accounts? How many accounts? Thanks, Anne. Anne is saying that she's seeing assets of the company going up. I love that. Any other student who can go to the chat section? I can see somebody, Mark Koros, telling me cash account and the pickup asset. Thank you so much. Thank you so much. Cash and the non-current what year asset. Thank you so much. You guys are very bright. I should be able to buy each one of you lunch today. Now, I know you guys are talking of an asset, blah, 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 but remember, we must also identify which assets are we buying. We like, in this case here, creating ledgers or journal accounts by the name of the assets you are buying. If you buy a motorcycle, then you must open what we call a motorcycle account. If you buy a pickup, don't go and hide it in assets or non-current assets. If you buy a pickup for now, just open what we call a pickup account. So I love what you guys are telling me. So we have the pickup. We have in this case here pickup assets account. The pickup account here must be open here. And then of course, because cash has been given away, cash account must be affected. Cash account must be involved. Cash account must be involved. Cash account must be involved. Now, once I've been able to come up with the two accounts here that will be applicable for double entry purposes, then I'll be forced to remember my general pair that whenever assets increase, you debit. So what does it mean of when assets decrease, when assets now go down, when assets go down? When they go up, when they increase, we are debiting. When an asset, in this case here, reduces, we shall be doing what here, somebody? We shall be crediting. When an asset reduces, we shall be crediting. Listen here, both of these accounts are asset accounts. Pickup is an asset, new asset you have brought on board. We have brought this asset on board. So I can see the asset called pickup here increasing. So the pickup account, I shall debit this pickup account, and then I shall come and credit the cash account, because now cash has done what here? Cash has gone out. It's cash out. So when it's cash in, I debit. Cash out, I credit. How much are we talking about here? We are talking about, as a gentleman here, pickup is 300,000. And the cash, of course, is what here, somebody? Is 300,000, like that. Now, as a gentleman, I would want you to listen and listen to me very carefully. Assuming you were to stop here, assuming that these are the only transactions that we had in the whole year, then what I'll do at the end of the year, I'll be able to extract what we call a trial balance. In the trial balance, I'll be getting what we call the total debits, vis-a-vis the total credits, vis-a-vis the total credits. So like now here, debits, I've got only two debits here. I've got two debits here. I have in this case a debit of cash of how much here? 500,000. 500,000. Of course, I'll be getting the balances. I'll be doing my ledgers, getting the balances. But again, I can see another debit here. Another debit of how much here? Another debit of pickup here of 300,000. How about credits? So credits, I can see share capital credit, 500,000, 500,000, and then I can see another credit of 300,000, 300,000. So this in total will give me 800,000. These as well will give me what here? 800,000. 800,000. At the end of the day, we normally do the double entry simply because we want to test ourselves at the end of the financial year. And we can only say that we are correct. Our journals are correct. Our ledgers are correct if the total debits are exactly equal to the total credits. If the total debits here, 800,000, are exactly equal to total credits. And that is why you are told, ladies and gentlemen, that we normally do this double entry system. We normally do these double entries for purposes of us checking whether we are correct or wrong. One of the functions of this double entry, where we try, is to check our systems. Of course, at times you could enter a particular transaction, even with some error. Maybe you are debiting with 19, crediting with 19. But you see, at the end of the day, okay, it will balance. But generally, ladies and gentlemen, when you are following double entry principle, you will easily get a mistake. Like I remember one time I was doing this kind of analysis. Let me show you what I was doing some time back. Let me show you what I was doing some time back. And this double entry really assisted me. So we had sold the goods, 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 we had sold the goods. Goods worth how much here? 10 million in my company. Goods worth, so we sold the goods. Sold the goods, goods, worth what year? 10 million Kenyan shillings. 10 million Kenyan shillings. Right? In the whole year. Right? But we received, cash received from the entire transaction, was 8 million, was 8 million, 8 million. All right, 8 million. Now, listen and listen to me very carefully. So in the journals, because I was using QuickBooks, what I did, I went ahead and opened the two accounts. Here I can see my two accounts which are being affected. I can see the cash account, and of course I can see the sales account. Ladies and gentlemen, from our pairs, this is what we have seen from our pairs. You said assets here will be debited whenever they increase, and then we have revenue will be credited. So the sales, in this case here, sales, ladies and gentlemen, I can see what my sales was worth here. It was 10 million shillings. But the cash that I could, in this case here, see here, was what here? Was 8 million. 8 million. So cash I'm debiting, of course. I'm debiting the cash and I'm crediting what here? The sales. Now, ladies and gentlemen, please listen and this really disturbed me. Because what this meant is that we still had some payables or other receivables. We still had some people who were owing us money. But when we were checking our receivables later, there is nobody who was owing us any money. So I was wondering what happened. And then somebody told me, no, there is a discount we gave. There is a discount we gave. And the discount is an expense in the company. Discount is an expense. And from here, expenses are supposed to be done what you're debiting. So I remember the very first I'm saying, hey, yes, we gave in this case here a discount. A discount of how much? A discount of 2 million. And now you can see these two debits are coming to 10 million, which is exactly equal to this one credit entry. This one credit entry. Credit entry. Very important for us really to appreciate this, right? So ladies and gentlemen, if I was to stop this class here today, right now, what are those things that will you take home with you? What are the takeaways of this session? I'm not finishing it, but I want to see whether my students are following. What are your key takeaways? Is there somebody who can just go there and try typing something very first for us to appreciate what our key takeaways are? What are we taking home with us about double entry? Great. Macoro says pairs is all, is everything. Pairs. Thank you very much. And to believe there must be other things that other guys have been able to appreciate. And to believe that there are other things that other guys must have appreciated. That is one thing I know. One thing, and also saying pairs, very important. Two accounts have to be affected. Thank you very much, Charlene. Two accounts and a double entry, two accounts must be affected. 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 Debit and the credit must balance. The total debit and the total credit must balance. If they don't balance, we normally create what we call a suspense account. And once you have a suspense account, then correction of errors must be done. Must be done. Must be done. Correction of errors must be. What would happen if I would have bought the pickup from his own savings and not from cash? A very good question. What if in this case here I bought this pickup from my own savings? Good question. Good question. Not from the business money. Good question. So if I do that, ladies and gentlemen, of course, it's a business pickup. So I'll go ahead and debit what here? The pickup account. And then I credit, this is the new capital that I'm introducing to the business. So I'll go there and credit my share capital account. I'll credit my share capital account. I'll credit my share capital account. I hope I'm clear with that. What does P and the L mean? Did I see that? Did I see that question? Are you talking about profit and loss, Aisha? I'm not so sure. Profit and loss. Or are you talking about pairs? No. Pairs. Pairs, we say it's purchases, expenses, assets. Purchases, expenses, assets. Then we have revenue, liabilities, and share capital. Fortunately, I will be able to share with you this video so that you can again watch it. And of course, ensure that, ladies and gentlemen, I'll be uploading this on YouTube. I'll be uploading this on YouTube. Please ensure that you are able to subscribe to my YouTube channel. Right? Like the video itself, subscribe. And of course, in this case, you touch that bell. When you touch the bell, what will it mean? That in the future, whenever I upload any video on financial accounting, financial reporting, you guys will be able to do what here, will be able to get a signal. Will be able to get a signal. Now, if you allow me, ladies and gentlemen, I'll be able to project something here and then we discuss. In 5 minutes, we should be through with this. In 5 minutes, we should be through with this. So if you allow me, this is what I would want to project here very fast. I have here, record each transactions in T accounts. I don't want to teach you T accounts today. T accounts will be coming in a different class. I would want to see whether there is anybody who will be able to know the debit credit. Anybody who will be able to generalize this. Like now we have A. Christine starts a business and pays $5,000 as capital. Could you kindly tell me in this particular case, which account am I going to debit? Which account am I going to credit? Somebody, if you participate in this very well, I'm going to give you a present. I'm going to give you a present. So we have a lady called Christine. We have a lady who is called Christine. She has taken 5,000 to a business as her capital. As her capital. If you participate in this very well, I'm going to give you a very good present, a very good present, a very good present. So in this case here, they're telling me, I can see two charts. Credit capital. I want you to be mentioning the two accounts, and because we know in accounting, we are coming twins, it's twins, two at a time. So you must tell me which account will I debit and which account will I credit. But if I were you, given that I've known that the capital is being credited, then knowing what is going to be debited is as easy as a walk in the park. It's as easy as a walk in the park. It's as easy, so it depends on where she kept the 5,000. If it's in the cash box of the business, I'll debit cash. If it is in the bank account, I will do what here? I will debit bank. Let me see the charts here. Let me see the charts here. So capital credit, cash debit. Thank you so much. And then later on, I'll also be training you because I normally do what we call practical accounts. Practical accounts, I'll be training you. You can never start with the credit. Normally you start with the account that is being debited. But that will come later. For now, I can excuse you because I know you're beginning your journey in this wonderful profession, the best profession globally. You know, accountants are up there. I'll be able to tell you why. Accounting is the best profession. It's the best profession. Now, ladies and gentlemen, so you're telling me for the first business transaction, we are going to debit cash, and then we create what here, capital account. Now, from there, we go to part B. The business buys a car for 1,000 cash. Who will be able to run with this board and tell me which account am I going to debit here? Which account am I going to credit without fearing? Part B, the business buys a car for $1,000 cash. The business buys a car for $1,000 cash. I can see an asset there. I can see something brand new coming to the business. I can see a car. I can see a car. So even without being really told here so much, I can see the account to be debited using the pairs. I can see the accounts to be debited. I can see the accounts to be debited. Yes, in this case here, we debit the car asset account. I like that. And then we credit what here? We credit cash account because cash has flown. You know, the car came in, cash went out. So this car that has come in, I will debit car account, and then I credit cash account. I'm so sure there are very many students who will go and tell us, you know what, we are debiting purchases. Purchases, you only debit purchases if whatever good you have procured is for purposes of reselling, right? It is for purposes of reselling. If, for example, ladies and gentlemen, please listen and listen to me very well. If my work is to sell plates, that's the business that I'm doing. If I go out there and procure plates, which I'm coming here to sell to make my money, that's my business model, then I will debit purchases. I will debit purchases because I've brought a good of trade, Whenever I bring a good of trade, then I debit. But you see, this car is just for business, transporting things of business from one place to another, transporting at times directors and employees from one place to another. They're not buying this car for purposes of doing what you're selling, not unless it's a business that buys and sells cars, which is rare. So this is a car account. It's an asset for the company. So I'll debit car account, and then because this car was bought by cash out, I credit cash account. Thank you very much. Thank you very much. Thank you very much. Please remember Galaxy. Thank you very much for bringing in this concept, but never say debit asset. You must be very specific which asset. It's a car asset. Thank you. Great. Now, the gentleman from there, we have this one here. See, they buy goods for resale for 500 cash. So given that they bought, I can see cash going away. So I know cash will be credited. because it's cash out. So I know cash will be credited. So which account am I going to debit for purposes of what year? Having my journal complete. So I know it's credit cash, but debit which account? Debit which account? I can see checks are coming in. I can see, remember these are goods that I've bought for purposes of reselling them. For purpose of reselling them. So I'm so sure from my PALS principle, I'm going to debit purchases. I'm going to debit purchases. Let me see what my dear students are telling me in the charts. Let me see what my dear students are telling me. Yes, debit purchases, credit cash. You guys are now becoming brighter. Thank you so much. Now from there, ladies and gentlemen, we shall go straight away to the next one. This is so interesting. B. They buy more goods for resale for 600. So if it's goods for resale, I'm so sure that I'm going to debit purchases. I'm going to debit purchases. But this time around, they never bought these goods for cash. They bought them from Mr. A. So I'm going to debit purchases, and then I credit to who? And then I credit to who? I credit to who? So there I have to take a minute and see whether Amanda tells me loans account. Remember here, ladies and gentlemen, here we have bought goods, but instead of us paying cash, we have accrued a liability. We have accrued a liability. Thank you very much. Thank you very much. Now, ladies and gentlemen, what has happened? Remember our balance sheet when I began. I told you assets are where on the debit. And then we have capital and liabilities on the credit. So liabilities, and even from payers itself, from these payers, liabilities must be done what you credited. So I will debit purchases, and then I'll credit a liability to Mr. A. Mr. A. So Mr. A is we are liable to pay him. It's a liability to us. It's a liability to us. So we shall be crediting Mr. A's account. And this Mr. A's account, later on, as we shall see, shall go to an account called payables, which shall be required to pay, not receivable. No, receivable is not resell. It's payables account, but that will come in later. For now, here we are debiting purchases and we are crediting Mr. A's account to show that we are liable to him. We are liable to him. We are liable to him. Thank you so much. Thank you so much. Ladies and gentlemen, I think, no, I should do the last one. 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 So like now, look at here. E. They paid rent of 200 cash. I love this. They paid rent 200 cash. So which expense should I debit? Which expense should I credit? Which expense should I debit? Which expense should I credit? Which expense should I debit? Which expense should I credit? Which expense should I debit? Which account I mean? You know, when I tell you expense already, you know that rent is an expense. So rent will be debited. And then, ladies and gentlemen, cash will be done what year will be, because it's cash out. It's cash out. Thank you so much. Thank you so much. So I want to take this opportunity to welcome all of you to come and study with us virtually, study with us virtually, study with us virtually, study with us virtually, study with us virtually. Our college is called RCM, Online College, meaning that we are a college without any wall, a college with no walls at all. We don't believe in physical existence. Suppose I have a small office at a corner house, Nairobi, along Kimathi Street, 13th floor. I have a small office there. But basically, all our transactions, all our inquiries are online, right? The only thing you need to do is to call our number of 0719 525 1,000. 0719 525 1,000. 525,000, 0719 525,000. And then, of course, if you can't get this number, yes, we have other numbers: 0798 94 94 99 99, like that. Yeah. Our fees is very friendly. For the lower part 1 CPA, we charge 3,500 per paper. Yeah. And then, of course, part 2, 3,800 per paper. Part 3, we have how much? 4,000 per paper. right? And then of course we have our pay bill. We have our pay bill. We have our pay bill number. Our pay bill number is 402-956-9. That's our pay bill number. And then we have our account number. Whatever the account number you put there, account number is your name. Your name. And then once you make the payment, please ensure that you engage these people. Engage these people, engage these people, engage these people for you to be able to get admitted and we continue studying. Experience, I've always taught for so many years. I've run commercial colleges for many years, physical college for many years, but I can assure you that Zoom classes are more effective. Remember, we don't have any words. We are coming straight to you, to your living rooms. Some of you are now able to follow my class here through what here from offices in here. Right? So bringing education to you. Where should you come chasing after education? You do it from wherever you are, right? With videos and students are able to discuss on WhatsApp, etc. At the end of the day, Zoom students will tend to perform much better than physical classroom students. All right. So I believe you guys will make a decision to really join us, and join us like when? Like today. Boniface, already for data analytics classes, what am I doing with them? I'm teaching advanced Excel first, right? At the beginning of coming month, until next week, we should be able to roll this advanced Excel and the data analytics course, the new course at advanced level, being offered by CASNEB, which is very, very serious, it's a serious course. Great. So it has been a pleasure, ladies and gentlemen, hosting you today. I'm so sure most of you have never seen this face before. My name is Dr. Joshua Aura. I teach the advanced level classes, but sometimes I come down here also to do what here to help my students like that. FA class has already begun. FA class is already ongoing. You simply need to pay us this amount, and then we shall be able to do what here to just put you into our paid up classes. So because this video will be sent to you, once you get it, don't forget to subscribe to my YouTube channel. Don't forget to like it. Don't forget to comment. Otherwise, thank you very much. What I'll do is simply to shut down my camera and of course, I'll not shut down the meeting. You can continue asking questions. Thank you very much. Be blessed.